Hey, welcome everyone. It's special session here today. I told you last night I'd be here, so here I am. A few minutes late, but nonetheless, I'm here. Just while the room's still filling up, we got about 80 folks here. We'll just chat for a few minutes. So just looking at some comments, we're getting started here. I would agree. I'm ready for the Powell talking to be over. And, if you think about it, and I said this last night, we're really not seeing any, best way to put this, we're not really seeing any extra volatility. We're just stuck. It was funny because I made a couple of Twitter comments, and for some reason, Twitter couldn't send my comments. I can figure out why, just about the markets. But here's what I was saying, is that if you look going back to the lows back in October, what you'll see is that 3502 and I believe 40, we'll look at the numbers here in a minute, but I think it was 4317 is the high of this range going back to October and the peaks. And if you take the midpoint, it's 3914. We've printed down 3914 multiple times. Last night's video, I talked about us printing back up to 0306 on the 40 handle, 03 and change the high today. So we're just continuing to see, markets just waffle sideways here. I mean, I'm tired of this range that we've been in. But my Twitter is personally censored by Elon. Exactly. Just for the record, if you're new here, make sure you subscribe, hit the like button, do all those things, whether you're watching a replay of this or whatever. Nice thing about doing these live streams right now, a lot of folks in Europe are still awake and watching the markets, and we have all the U.S. folks. And actually, it's getting right into the range where even some of the Asian folks are able to come in. So this is a pretty good time to be hanging around. We're just, like I said, it's pretty boring trading so far today. There has been a couple opportunities. I keep talking to you folks about that period of time, if you're around, where you can see the hour before London and then up to about 2 hours afterwards. And actually, it stays fairly active during the night. If you're, for me, I have to stay awake, and I'm really disappointed for. I'm really disappointed that they're changing these clocks this weekend. Man, it's going to kill me. I hate it. We're in Arizona. We don't change our clocks, and supposedly they're talking about staying on perpetual daylight savings time, which means I'll be living in a mountain time zone, but I'll be in a perpetual Pacific time zone clock. And it changes everything. Like I said, you folks get to just put up with losing an hour. I get to put up with changing all my habits. Instead of the market open at 7:30, opens at 6:30. Everything has to start earlier, which makes life just a bad time zone. I swore years ago that I would never be in the Pacific time zone, because for most of my career I was on the West Coast, and yeah, unfortunately here I'm going to be back there again, maybe perpetually. Maybe eventually I'll get to move out of this state. We're trying to figure that out. So anyway, enough of that. I'm just trying to a little chatter here as we're getting the room filled up. So as far as what's going on here, it's interesting. The 10-year has managed to move back to 398. It was down. Just trying to get a number here real quick. We got down to 390. So we keep kind of bouncing around here. I don't see a big acceleration in any of this stuff here as far as higher yields go, even though Powell's talking about yields. So let's go ahead and see if we can get into just a couple things, and then we'll get into some markets. I'm going to see if we can get some trades setups here. And let me just go over to a screen here. I've got, I actually have a trade working right now. Was buying at 39.74.75. So looking at a little bit of a slight profit here. This is a dragon head setting up. I just wanted to take a quick look there and see what was going on. But let's come back and let's talk a little bit. I didn't watch a lot of Powell's testimony today. I watched a little bit. I think one of the interchanges, I saw some folks talking about this last night when John Kennedy from Louisiana was cross-examining or whatever you want, asking questions to Powell. He made an interesting, he's obviously not an economist, but he's saying that for in history, going back to 1950, you have to raise rates 3.6% to knock down the inflation by 2%. So what his analogy that he put together, you have to raise rates to 10.5% to get rates down to 2%. So let's talk about that. That's not going to happen. Okay, they're not going to raise rates to 10%. They're probably going to start. Whether they do 25 or 50 here in a couple of weeks is totally not relevant. I do not believe. But my expectation, and you folks have heard this for weeks now, is that we're going to see rates. They are going to stay higher for longer, like for 10 years. Okay, they're not coming back down. There's no pivot. They're not going to come back to anything that looks like before, no matter what happens. And I would agree with one thing that Kennedy said that I thought was interesting. He goes, they're not going to change anything. They're going to keep going. Well, I think I think rather than keep going and raising, they're just going to get to a point and they're going to freeze it. So terminal rate, I'm still stuck in around 5.25, 5.5. And then as I've been talking about, and maybe I'll go through it today, we've got lots of time here. I can go on several of my rants if I want. But the general, if we look at the yield curve, we're starting around 5%. It slopes down to 390, roughly 390, 395. Everything's just going to slide up, and the scale's going to go a little bit higher. I think once we get stabilized at 5.25, we'll start to see the long end rates start to climb a little bit. And I think we'll basically see things stabilize there in a very flat yield curve, maybe slightly inverted, but nothing that matters at any extreme. And I know so much was played off with this inversion in the yield curve and the 210s, and it's the biggest it's ever been. None of that stuff matters. You can look at the metrics that are coming out. We're not seeing the implosion of the economy. And I have been telling you that Powell is disappointed that more of us aren't unemployed. And that was the other point that Kennedy made. Said what you need is unemployment to go up so you can control inflation. And Powell pushed back. And like I said, this economy, the way it's structured right now, if these jolt numbers, any of these things are anywhere near what they're claiming they are, then there's plenty of jobs around. They're not going to be able to knock this thing back very far, and it's just going to keep rotating. So my argument is 5+% on the Treasury market, interest rates on, we'll say, mortgages and those type of things will be somewhere around anywhere from 7 to 9, and it's just going to be there. So if you want a new house, you're going to have to pay up to get it, and in the end, it will all work. You'll see it'll all work out. Whether there's some creative financing type things come in, whether wages continue to climb, I think we're in this inflation and the rates and things that we're seeing here. We're locked in, folks. We're locked in, and I don't see rates coming down very much for a long time. I think I made that point. So let's, so the whole hypothesis that Fed's going to have to raise to 10% to knock it down, I don't think that's the case. We're seeing it moderating. It's just all going to be about the same. Interest rates and inflation, all that stuff's going to be about the same, I think. We'll see. I reserve the right to change my mind, but for right now, I think this is the plan. I mentioned something that Powell said last time in the last Fed meeting that I think was significant, and it was kind of buried in a question, but I mean, all kinds of whistles and bells went off for me, which was, he was saying that, that they believe they're restructuring the markets, in his case, interest rates for the long term, which the economy is going to benefit from for decades. It was the word he used, and I believe they will do exactly that. They're going to keep rates for a long time. I keep arguing here, and I know if you've probably heard this before, but I need to say it again, is what we're going to see in the interest rate markets is more of what we've already been seeing. And equity markets, I've got some young guy that means well. He's kind of on Twitter telling me that I'm ignoring all kinds of factors. I'm not ignoring anything, okay? And you have to understand, and he's calling me out as a typical money manager. I'm anything but that, and I'll talk about that for a minute, because here's the thing you should understand about what's going on. Right now, our models on the intermediate, they will go through some of that stuff here in a minute, but in the intermediate are 70% long, 69 and change. And when we get to those levels, that is a sustainable intermediate trend. And people equate everything to these indexes around the screen. And yeah, the indexes are going to react, but we're looking at 15,800 symbols. Right now we have over 10,000 symbols, almost 11,000 symbols long. And I was telling somebody the other day, I might be wrong, but I'm not going to be wrong 10,000 times. And the probabilities of that is that probably somewhere around 6,000 plus of those symbols are going, by the time we get our buy signal that we have now and the exit on that symbol, we're going to have a profit. In some cases, a lot more than we thought we could get, in other cases, less. But there is going to be a profit, and probably typically in a cycle like this, we'll get 60% of the cycle. So we could go through this for the next better part of 2 quarters, and going into Q3, where somewhere in the beginning of Q3, maybe we start to peak out. Maybe we won't have summertime blues. We'll have a summertime rally. Don't know what the circumstances are right now. Markets are very dynamic. Who knows? Maybe we have a ceasefire in the Ukraine. What does that mean? What does the world look like then after that? I don't know. I'm not predicting that, but there's a lot of things that could happen. And just looking at what the Fed's doing and this whole scenario of what everybody is saying is that these higher rates are going to destroy the economy and we're going to have a recession and all that. It's like I said, it's so mainstream, so that narrative so loud, it has to be wrong. How does it change? I'm not sure. I'm just going with our database, and I've seen the folks yelling from the rooftops before, the sky is falling, the sky is falling, and meanwhile the sky doesn't fall at all. I'm just kind of regurgitating some things that I think are also out there. I think that many market participants are, the other thing is earnings. So how are the markets going to go higher if earnings aren't expanding? And I don't know that they're not going to expand. And I don't think anyone else does either, but everybody's, based on this interest rate scenario again, is saying it has to be less. And, maybe the multiples get worse. Excuse me. But anyway, kind of starting off a little bit of a rant here today, but I think it's important to have some context of what's going on in these markets. And what I'm seeing is nothing really. I'm looking, we'll go through quite a few things where we'll look at the dollar. Dollar's printing 105.70 again. So we're seeing some rotation in areas that are starting to affect other markets. So there's a lot of dynamics here. There's nothing straightforward. And like I said, if I'm going to go all the way back to talking about equity markets, if you look at the range since October lows, it's 3502.43. We're going to call it 10 or 11, I think is the right number. And the midpoint is 39.14. We're looking here right now, 39.83. That's on the futures, by the way. So that is the mid-range of the futures over that time. That's the midpoint. So we're just trading a little bit above, a little bit below. 39.50, 40.50 continues to be it. Last night I talked about back to trading just like we did 8-10 days ago, back to trading to 39.50, then 40.03, 06, 10, rejection back into the range. And it looks to me that we probably have possibly another couple of weeks. So we'll go into some analysis here in just a few minutes, see what you folks are talking about here. Yeah, I think I see NFL saying the last few years have turned average person into short-term traders, just so they can have a shot at retirement. I don't know that we deal with lots of retirement money, literally billions of dollars of this. Okay, so I could tell you no. Okay, there is a lot of individuals maybe that are going that way, but there's still a lot of folks, and that's part of what we're trying to, try to authenticate here as we go forward. Because one of the things that I'm going to talk about a couple of things here in just a minute. We're going to get into analysis. We got plenty of folks here. We're getting close to 300, so we'll get on to some analysis and maybe some trading. I see ES now is trading up only down 5 on the day, and I'm long at 74, so I'm liking that. So that works for me. But the what I want to accomplish here today, we got hour and a half from now, is I want to go through some analysis. I also want to start talking a little bit about some trade setups and some other things. You folks are going to see very soon, I have a mission in life, and that's to help people manage their 401ks, manage their money, the ones that want to be deeply involved in that. We're going to be starting some mastermind courses. There's going to be one on indicators, one on Wavetech, one on PortfolioXpert, and there'll be we're working on the schedule and all this stuff. So this stuff will be going forward. We did a live room for about a year and 3 months, 4 months, and I've closed down the live room to be able to restructure how things are going to go forward. Now, this was supposed to happen in January, but I got sick and was down for pretty much the whole month of January. So we're starting it. We're finally getting things done. And one of my associates is going crazy right now working on this project because we just got one of the phases done. So as soon as it's there, I will tell you exactly what's going to be there and how we're going to do it. So we've been working on a number of things, and then I'm going to do this, tell you what we're doing, and we're going right into analysis as soon as I'm done here. Is basically what we're going to do is get all these mastermind classes going, getting everything and get it structured into an environment that everybody's going to be able to participate in. I'm going to be deeply involved. We stopped the trading room so that we could actually affect more people in a better way. Those of you that are in the trading room, I know some of you are here. You guys know it. I told you we had like an emotional last week ago, Monday. It was sad because there's been some amazing things come out of that room, and I'm still want to have some very close contact with a lot of you, and I want to be able to open that up. We are working on potential doing a we'll call it a meet and greet live event, and I don't know when that's going to happen, but this one project, as soon as it's finished, then it's going to be project 2 go on. Unfortunately, I have some international travel coming up, so there's going to be a couple little breaks in here. So we'll just play it by ear, but we're working on making a very robust offering to get everything together. Let's see, I just saw a news print come about Fed Chair Powell proposed wholesale CBDC implementation could bypass Congress. That's a scary thought. I think, I'm not gonna. I wish I could say something. The nice thing about being in our old live room, it was a private server. It didn't have any connection to the bigger world of the internet, so we could really open up and talk about things. But all right, so let's go through some basic analysis like I do at night. And let's take a look at some of the trades. We're hanging around -6, -5 right now on this. So let's go ahead and take a look at some things here. I mean, after all, that's what you're here for, right? So just looking here at the middle, this is my level 2 trading chart here, and we're bottoming right in here around this 74. This is a classic rounded bottom here. I want to go over real quick, and just so we'll pop over to the screen here for a minute. And what I want to look at here is we look at the market grid for today. We're looking at S173. We printed 7150, so almost a perfect S1. R1 is 0575, so we've done an S1, R1 today. Pretty quiet range, actually. And what's likely to happen if we come over here, and we'll go through a couple things here. This is the daily chart here. It looks like we have probably coming into Thursday, we start potentially starting a little turnaround here. There is some Fibonacci targets down here below potential for 3947. I went through a lot of detail on this 3947 level last night, and I mentioned this 3914, which is the midpoint of what we've been through. If I expand it out, if we go back to this whole period here, you see back to, let me just bring that in a little bit more here. Let's draw in what I'm talking about. So I want to set this up, and like I said, let's take a look here. Yeah, so I'm just this is really what I was talking about here is I've just drawn a rough range around this. I can't resize it, but this is where we've been at. We've just been working this channel for a while, and when we go down into the bottom of the channel, I get told we're in a downtrend, and then it goes back up to the top. And really, when you get this is the benefit of hindsight, but if you go back to videos, I was actually talking about this being that we were going into a sideways choppy range for a while. If you watched, I believe it was Monday night's video, I went through the longer term aspects of the markets, and basically it looks like for the next year and a half we've got a really choppy range that's going to be set up. I am not. Some guy was calling me Rocket Man on Twitter, I think it was, or maybe on YouTube channel. I'm not. I'm bullish on the individual stocks. I'm bullish on rotation that's going on within the sectors. There's some positive rotation. There's some really good money to be made, but I'm not overall super bullish looking for ATH or anything, all-time new high. I'm not looking for any of that stuff. And it looks like to me that it's just going to be really choppy. We have an election year, general election year coming in 24. It looks like things are going to stay not in a great shape. As far as the market patterns go, it's not going to get any worse. But let's go ahead and take a look at that. So now that I said it, I want to set it up so you have that vision, and then we'll continue to dig through here. So let's go to SPX so we can get to long term, and let's put 3M here, which is a quarterly chart. So this is the quarterly graph of the S&P cash. Right now we're looking on the screen back to 1994 to current, and this volatility that we saw, of course, this where my cursor is right over here, that this is, matter of fact, let me draw in some things that I want you to be able to see here. Yeah, so there's a couple areas here I think that are worth noting. Volatility over here around 2018, and I think now what we're going to set up, and I'll draw this in, is what we're likely to get here. This is a long-term chart, so one bar in this chart is 3 months. So talk about watching paint dry. This is it. This is the scenario I've been talking about. Let me get a different color. So we're really looking at some kind of pattern where we stay within some range here above these moving averages, and we work sideways in here. It's potentially not to 25 and beyond before we see the S&P actually make a big move. All of this could change. Obviously, we could do this, or we could go up. Either way could happen. Right now, it looks to me that we're going to just see a couple things just stay in this pattern. And let me define this just a little bit better. Is really we're just looking at these moving averages. We're probably going to see a much tighter range. These moving averages are flowing up here. I talked about the angle of attack. All of these averages are pointing up, all three averages, 10, 21, and 40. Now these are 10 quarters, which is what, 2.5 year moving average. The 21, man, can't do the math real quick. Somebody do the math. 21 quarters. How many years is that? So these are super long-term moving averages, and they don't change much. And in fact, if I just take all this stuff off of here, and if we look at going back to longer term, I have to take this off to be able to reset this chart. But let's just, when you start to look at longer term, with 2000, we had a significant sell signal. You'll see this triangle with the 5 in the middle of this page. This is the Wavetech. You guys hear me talk about the STX buy signals. Well, there were 5 times on a quarterly basis going back over here to July of 02. There were 5 quarterly STX buys without an opposing RTX sell. And when we get that, that tends to be a really, really big bottom. If I flip this just for a second over to a daily, you'll see on the futures, we got 5. We got 5 here right at the lows here. And let me flip this over to the ESs real quick, because this is what I follow all the time. You can see right here on the ESs, we got 5 on September 29th. And of course, October was the low. That signified the low. This also signified traction starting to come back in on our database and all of that. So I'm going over to our website here for a second on PortfolioXpert. Nice. I thought I was logged in. There we go. All right. Yeah, so if we go over here, we can actually look at some of the metrics and what was going on there. But if we look at the database, you can see this is on equities only. It's at 59%. These have much different metrics. But this is where I got that chart that I show you folks all the time. If you look, here was the peak of this was at that 72%. You folks have seen this you've seen this thing that I've talked about forever. We got this big decline, and the initial decline until we get back under this 42% level, which happens right after the highs up here. This continues on. So right now on the larger database, we're at that 72%. So this is what is being projected on the upside. So back to these. Let's go back to the SPX and the long-term chart. So this is why I am confident from the standpoint of the longer-term situation here that we're going to see a continuation of this upward trend. But for now, we consolidate here and we get these bubble formations. This is a bottom bubble. This is probably going to take at least 4, maybe as many as 6 quarters to form this. And during this time, and this has been my argument for a while, during this time is the opportunity is not going to be, there will be plenty of places to trade the indexes and all that, but the opportunity is going to be, and I keep talking about these secondary stocks and onshoring. I'm working on these projects, so I will reveal them. They're big projects, and they're projects that once they're done, they'll be in place, because I think these themes will last for a while. I've been really good at thematic type ideas and moving forward and ideas in the markets using our PortfolioXpert software. So I'll be talking about that. But back to this long-term graph here, what we're seeing is literally this upward slope going to stay in place. As we back out, you'll see the relevance here. This is an interesting chart, and I wanted to show this to you because here we have upward projections on the monthly. For we look at it right now, 6,118, 7121, 7741, and these are really big numbers. And those have been around for a while, which would be some of my institutional clients. Way back in 2019, we were getting projections for the market to go to 4,100, which seemed kind of ridiculous. And as we know, we went to 4,800 before this thing topped out after the whole COVID mess, right? So what we're looking at here on a monthly is advancing. The algos are suggesting we're going to see these moving averages start to turn up, but we're going to have lots of resistance. 42, 43.15. That was the number I believe we printed. Let me see if I can find it. It's right here. Yeah, 43.25 on the cash was the high back in August of last year. And so that's going to be your big pivot point. I think we challenge that. And if we were to get to these numbers, 6,100 on the S&P, that sounds pretty much ridiculous, right? But we've seen these numbers, they look ridiculous. And this would take this would be a multi-year to get to there. It would be 18, 24 months minimum, and then probably longer than that. But looking at the quarterly chart that we were just taking a look at, it's pretty obvious that we're probably into 25, 26. So we're looking at least, 8, 12 quarters before we can even set up a pattern that's going to be super bullish of that magnitude. So I just want to make sure when I go through these long-term scenarios, what I want to make sure is that you understand these things take a while. So, somebody was talking about, well, weeks ago you were talking about 4,300. Yeah, I was. I'm still talking about 4,300. Our database is still long. 69% of the stocks, or otherwise 7 out of 10 stocks, are long right now. Stocks, mutual funds, ETFs, what have you. It's a blend of everything. And that really is setting up the longer term tone that I was just showing you. We're around at 72%. So what we should see on the database, and I've been talking about this, we'll start to see some attrition, but the market should move higher. I don't see, like I said, I'm not looking for new all-time new highs. I'm not a rocket man. What I'm seeing here is an evolution of many of the sectors that are out there. Let's see what I've got up here. So let's put this up here real quick. And I'm just kind of going down some ideas here. And what I want to do is I want to get to, so give me a vote here. White screen or dark screen? Let me know what's best for you folks to see. Okay, there's a dark vote. Okay, so we'll stick with dark. So what I want to show you here is we built some indexes. This is the Wavetech 250. This product is like so crazy powerful. We have a thing up here in where it says queries, where we can do some data mining, and we can find. We tried to round it off by sector, so we have a number of all the sectors being represented, but also they have to meet the criteria of we have to meet the criteria of some of the fundamentals and to make the index. And we'll be publishing some of this somewhat soon as we get this together. The blue line in the model on the bottom is the S&P 500. And this goes back to 2018. So the S&P 500 is up 50%. This index is up 180%. Now there's 250 symbols in this database. And the reason why I wanted to show you this, that when you start to break down and get out of these indexes that are out there, you can really build some really interesting modeling process here. I can make this, I'll make it full screen so you can see it. You can see what the results are. It's not that there's not downside, but it just manages that we built a process called dynamic profit harvesting. And during this time, we can accelerate the growth of money when it starts to go up. Those of you who've been around the channel for a while, you will remember the Warren Buffett trade that we did. I built a portfolio. We actually made roughly 110% in 8 months on airline stocks, which is unheard of. But that was 2020. Warren Buffett was selling out. He was taking his bat home and didn't want to play anymore. And anyway, I knew it was a big mistake. There was no way during COVID they were going to let these guys go down. And there was an amazing play there. So just looking at a couple, so FF is right. I am a quant, and this stuff is so counterintuitive. You know, you're just going to have to see how this unfolds and hang around the channel for a little bit. So keep watching. But one of the things that we have here on these metrics, and I'll break down, like right now we have the open positions, and I know this is really small for you to see, especially if you're on a phone watching this. It's going to be impossible. But what this shows us is every trade that's currently long, everything that's long in here, what the last price is, the percent profits, all that stuff, and I can put it by I can sort this page here. You can also export it into Excel if you want. But the point is that these are all the symbols that are in the database. There's negative trades on right now. So when you go back and we look at the equity curve, all of this stuff is being calculated on a daily basis. The reason why I showed this is that this is looking into the world of getting away from the best way to put this, getting away from just the standard indexes. And what we're trying to put together right now is the Wavetech 150 stock list, Wavetech 250. They have slightly different criteria so that you have, these are the stocks that work the best with what I've built over the last several decades. And I want community to have access to this stuff. But you can see this is the 150. Fewer stocks, been really stable here. It's been kind of a tough run since October of 21, but the downside has been muted here pretty good. So the green line again is Wavetech 150. The blue line is the S&P. And we could even come up here and we could put the, I forgot we could put the, I forgot there was an error in that one file, so I messed it up here. Let me just go back here. There we go. Sorry about that. But this is really what it looks like when you start to just go into stock. So we have open positions right now. of the 150, there's 86 that are open. If we look at the current projected positions right now, we have about 10% in cash, so 90% is invested. And then on the annual, the only losing year since 2015 was last year. It was down about 13, which was about this, as from an index viewpoint, this is about the same as what the S&P was last year. The overperformances during that 20 run, we were able to really pyramid the capital up pretty good. But my point of this is really these active symbols this is the list of all the symbols that are in this in the database in this portfolio. So anyway, like I said, we're putting together a whole lot of stuff that's going to be out to the community to focus in on things that are just not your typical everyday stuff. When this individual was calling me a typical manager, we're not typical managers. We're more than willing to go to 100% cash if the market gets ugly. And in fact, we did do that in February of 2020. So let me just see here. Yeah, so this is, I'm just showing you. So this is the Wavetech 150. This is what we call a fact sheet. And these are all the statistical breakdowns. So we have a lot of information on what's out there, how the sectors are played out. We do a lot of analysis on these portfolios, but they're very dynamic from the standpoint of how they work. And right at the moment, I'll just put this out here as well. At the moment, we do not have the ability to do any foreign stocks. I'm working on a potential of adding some European, we'll say FTSE stocks, a couple other bourses over in Europe, and then possibly Australia, maybe an Asian index. I'm working on that as we speak right now. So that's a little, we'll say that's 2 to 3 months away, but we are working on that. Yeah, I'm just looking at FF. This is, yeah. Yeah, so the nice thing is, I'm just looking at what Christoph said. Good to see you out here again, Christoph. But it's how much dollars. The dollars don't matter anymore. So I don't know who Larry B is, but now that you can do fractional shares, dollars are totally unimportant. You can now run a fairly robust strategy without, and you don't need to have the big bucks. That's old standards. You have to go back pre-2019. After 19, there's, for the most part, I know, Christoph, you're in Canada, some of you internationally have some restrictions, but we're looking at the, you can do fractional shares, no trading cost, or otherwise no take per trade cost, and it's not just with Robinhood, but you can do it with Schwab and TD and all those guys. Even Fidelity has that, the big brokers here in the States, and there's plenty of other folks that can do that. Interactive brokers can do fractional shares. So it used to be based on how much dollars you had to do X amount of stocks, do air quotes. So we used to, all of our advisors, we used to tell them, if you have accounts that have 100,000, then just what you're saying, that you have to have this many stocks. If you have 250, you can do this. Well, all that's out the door with fractional shares. You could run a pretty reasonable 25, 35 stock environment, even on a $10,000, $20,000 stock. The problem is getting a lot of transactions going on. But these fact sheets are kind of interesting because we break down all the stats. And this was probably one of my favorite stat pages here, is that it shows that on this particular set of stocks, on 150 stocks, 82% of the time we are invested in, we have the money working. So 82% of the money is working at all the times. And so that's a really interesting thing. Then we have the rolling returns, and what you can see a whole lot of information. I won't explain this, but folks, this is what I am trying to tell you. You can't, if you're going to seriously take over your own money and do these things, you got to have the right tools. And this has been institutional based forever. And I'm going to really open the door to you folks. I'm going to personally train everybody. I'm really going to get involved in this because it's a mission for me to help folks out. I don't think a lot of folks are going to be doing the Wavetech 150, but you might be able to cherry pick it. We're going to do ETF hacking, all kinds of things of that sort. So there'll be plenty of that going. Okay, let's get over and let's see what's going on in the world here. Let's come over here. We've got this is a 1 minute chart. So let's stay here for a few minutes. Let's talk about some live trading. We've got an hour to go here. Let's take a look at this. And the algos right now are suggesting that we're going to see some upside. This is a 1 minute. So 1 minute has kind of got a slight bias after this bar here should start to flip around, and we'll see if we can get some kind of movement. I'm going to set this up like we do in our day trading room. Let's see if we can find some cool stuff here to possibly make some money on. So we got the 5 minute chart. 5 minutes under a little pressure yet, so it's backing up just a little bit. I'm actually left that trade running, so I'm pretty close to back to even here. I'm still up a little bit here, but I'm in at 74.75. I'm just letting that ride. It looks like it's going to get challenged a little bit. In fact,
Order filled.
I'm just going to close out that trade for the moment. Okay, let's go. Let's go back to trading view. Like I said, the 5 minute looks like we got some downside coming here. And this is the way we set this up. I use 1, a 5, and I need an hourly. So let me slide this over here and let's get the hourly chart. This is pretty much what you need to trade. And this is interesting because the hourly chart's starting to get shows downward projections right now. 10-period moving average looks like the PPMs, however, are trying to stabilize in here. So we've got the patterns being picked up. So there is, I'm going to put this up here just so you can see it. I'm going to show pivots on this indicator. So this is the Wavetech indicator. So these arrows are showing you where our algorithms are picking the highs and lows of these patterns. And then it's projecting Fibonacci patterns out real time. So if we come over here to the 1 minute, it's doing the same thing there. Let's just put that up. I want you folks to see the power of these indicators. Okay, we'll put the pivots here. So what the red and green arrows are doing is showing where the pivots are. The pivots are used on the logic that is recognizing the high-low is used for our cycle finder, for our fib target, and also for just for any kind of cycles or pivot levels. So this is interesting because the 1 minute is still trying to bottom here. It's telling us we're going to try to turn up. We're getting a little bit of a bid. We go over here to the 5. 5 says we got a little bit more work, probably about 2 more bars at about quarter after, like 8 minutes. We should start to try to set up a bottom here. So we'll see what happens. Let's just hang out with this stuff. Have fun, see if we can put some trades on. Did somebody get Levi? Did he show up? Awesome. Thank you. Anybody in blue, if you're new to the channel, those are my Smurfs. That there's any bots around, they take care of them. Yeah, thanks, Pamela. It's so nice not to have to worry about them. Thank you, folks. We're going to have to figure out something special to do for the Smurfs. So let's watch this a little bit here. We got the 1 minute. It's trying to turn here. So we're probably got one more bar and then possibly setting up this around 15 after on the 5 minute is looking like a potential bottoming pattern here. We're coming into final hour. So we'll just kind of watch this because I want you folks to actually see how these things work. So I know I've been kind of all over today, but here's the hourly graph. Hourly showing fib target down. We got a pivot here. And even though we have these downward pivots, we're not seeing, so if for this to be valid, we'd need to see the acceleration down in these indicators. We're not getting it. And this is an hourly, so the next update on this chart from that standpoint isn't going to be until the top of the hour. So the 5 minute is, so we just got an update on the 5 minute literally a second ago. Looks like coming in, yeah, just this next bar is going to be the one to watch and see if we can't get a trade off of. I've got on my other monitor, I've got potential to fire away on a trade here. So we'll watch this pretty close. Let's go over to the one. Let's just track these folks to see how they're going. I'm glad Paul's not talking. So we also have some upward projections here. There's some green dots in here, and you can see the values over on the right. High target one, 39.78, 39.79, 39.80. Last trade, 77. And
order filled.
Okay, I just bought 77 evens, just looking for a scalp up to around 78.5. Let's see if we can get into these fib targets here. The 1 minute's turning. I'm a little early, I think, on the 5 minute, but it's close. And the 1 minute probably will lead us to the promised land here. We'll see if we can get any traction on the upside here and just see it move up. There's some resistance here on the 1 minute at the 21, 39.78. Yeah, pretty quiet here. Just watching. So we get an update here in 40 seconds. We should see the algo start to turn up. Let's see if we can get any traction. And really, there's not much here. Maybe up to fib target 1, 78.75. We've got market grid. We've got a lot of stuff in play here on this screen. We've got the market grid. We've got the waves, the webs. And then we have our Fibonacci targets. You can see we got a pivot down here. And so we're getting a little bit of traction here. I just have 5 contracts on. So let's go over there just real quick. So I got in at 77. It's trying to move up in this pattern, but there's a lot of overhead resistance. So we'll see if we can get work through this here in just a few minutes. So now we got on the 1 minute, we just got some downward projections, but like I was telling you before, this next minute, what do we got? 32 seconds. We should see if we get a confirmation that PPM1 turns up, we should try to challenge the 21 period moving average, which right now is 78.80, and see if we can hold these numbers here and get that upturn. So we're 12 seconds away. So here we go. Okay, there's our update. We did get a slight uptick here. We're looking at a flat period moving average. Yeah, we need to get above 78.73, and we're trading 78.75. Here we go. Let's expand this so we can see this just a little bit better. So we traded, there we go. We're trading up into that number now. That gives me a little $500 profit, but it's back to 312 here. If we can get above that, then we're probably looking to try to max out here at R3 on the 1 minute. Let's take a look at the 5 and see if that sets up. Okay, 5 still kind of struggling here to get out of the way. So we're still looking for that update. Here's 8 seconds. So let's take a watch. 5 seconds to the 5 minute update to see what we get going here. There it is, kind of flattened out on this thing. Once again, lots of resistance around this 76, 78 level. Go back to the 1. So we printed down, but yeah, we're just getting a little volatility here. Yeah, I'm back to even on the trade. So there's not a lot here. I'm just trying to demo exactly how to read these things. I know many of you have gotten the indicators and everything, so this is a little bit of live training. I'm a little concerned with this trade. We got the next update here. We need to get over this 78 number, or it's probably going to fail here. We're trading 76.75. We need to print it up. It's starting to move down here just a little bit. Really, we need this 5 to turn up. We're trading down at RTX on the 5. This is about as extreme as it's going to get. Back to 77, which is where my position is. We're just waffling around here. RTX on the 1 minute is 78 even. I've actually got an order to sell out here, just to do a little scalp. We're just not getting any real traction here. We'll see if we got 3 minutes to go to this 5 minute update. Check out the 1. 1 minute is trying to tick down that offer. We got a little expansion on the market grid there on this last update. That number 78, that's the big number to watch for. Just need to break above that number. What a narrow range. But anyway, what I want to show you here is that the algos have flattened out a lot, so we're kind of into low to non-volatility. This is a 1 minute. 5 minute is suggesting we're going to try to bottom here. We're trading right down in RTX. I'll show you over. If you can see this, if you're on a large enough screen, over on the right-hand side, 73.49 is RTX. So far, the low has been 73.57. So we printed down to that low. We're back above 77, 77.75 printing right now, trying to get through 78 even. Let's go back, go to this hourly chart here. And this is an ugly market. I'm glad Powell's done talking. Maybe we can start trading off of something other than Powell talking. So here we are, 77.75. We went offered at 78 for a second. Can't seem to break through there. 1 minute says, the next minute we'll try it again. The algos are flat to slightly positive on the one. The 5 minute still trying to flatten out. Like I said, the numbers to watch for here, really the 78 is the only number that matters here. I like Frosty G. That's interesting comment. I like it. Today you may not be right, but you are never wrong. Pretty funny. What we got here? We just got an update. Really not getting any traction here at all. I mean, we're back at just waffling around here. Let's go to the one. Yeah, like one just got some new Fibonacci. So this is what I want you to see here. We got new Fibonacci, these three green dots. We have a new Fibonacci 79.25, 39.80, 81. We're trading right at 77.25. So the 1 minute's trying to turn a little more bullish, trying to get up here to challenge the 40 period moving average, which is at 79.35. That's where the fib target one is. And like I said, the algos just got an update on the 1 minute. They come at us pretty quick. So it's just struggling here. What number? 78. There's 79 print. So getting a little traction here. This is what a key element here. I'll just go over to TradeStation here for a minute. And this is a potential bullish pattern, but we're going to need to trade actually not just 78, but probably about 80 plus to really get this thing moving. So we spiked up a little bit. We printed, what was the high print here? We printed up to 79 and a quarter. So we're still 850, so we're kind of staying above that. Let's go back to the algos here. And yeah, so 1 minute, this is interesting. 1 minute down here in the bottom, PPM3 is projecting on the algo that we're going to get a break above the second derivative. That tells us we should challenge the 40. Maybe we see a 80 print, which would be fib target 2. There's quite a bit of resistance here on a short-term level, so just trying to be patient here. All the way back to 77. No follow through. I don't really have high expectations here. Looks like that last update, we weakened a little bit, but we're really in this consolidation phase here. Back to 78.25. All right, so we'll spend a few more minutes. I'm getting bored, but I did want you to see how these algos are setting up. Let's go to the 5, take a look at that. 5 is just struggling to break out here. The first derivative is going to be resistance here. So we got past that point where it looked like we could set up. We still have Fibonacci projections on the 5. So is this the move up to 80, 88, 82, 96, and 4,000 even is what these are off of the 5-minute chart. Problem is, we go over to the hourly. The hourly is suggesting that after this hour, we probably could see a bit of a rally, maybe get above 87, which is the 10-period moving average. But it's going to be pretty slight on that. So, folks, ask questions. Stay involved here. You guys are chatting amongst yourself. I'm not talking about silver. So would like to see some chat here on we have a guy that look at this, they're selling it now. As soon as I turn my head around, trying to read some comments. See if this, what do we got to update? We just got an update here suggesting that we get a move back, but the 5, on a 5-minute, we're seeing some downward pressure here. We're almost down into trend mode here. And I think
order filled.
Yeah, I just took about a 250 loss. I'm bored. It'll go up now, but I just I just want to break away out of this following this trade too close. Yeah, I'm just trying to see, Sisson, looking at the PPMs, how do you know the value of the price on the chart? It's over here where it says PPM 1. I think you're talking about the value of the PPMs. It's now minus 0.18. So all of a sudden we went from trying to bottom. If I was actively trading, I should have went short, just flipped that trade short. So we're starting to get some downward pressure, but the 5 minutes suggests we should hold down here at this into the market grid. So the values for the indicators, so this is the way these indicators work. White is coded to the 10-period moving average is PPM 1. PPM 2 is coded to the same color there on the red 21. And then the cyan is the 40, which is up there on the top, and down at the very bottom is the PPM 200. So it's not even on the screen right now. Where is it? Where is the 200? Oh, I don't have it on the I don't have it on the moving average. So I'll have to. I'm just going to take that off. I'm going to throw on. So now you can see all the same colors. The 200 is up here. It's interesting because these price objectives up here on the 5 minute are right heading toward the 200. One of the things that we did in the live room a lot is just trying to set up some of these trades. Volatility is so low. I mean, if you look at the last, we're just kind of drifting. So we're back at 76.50. So we traded down and it just in a flat range. So there's unfortunately no volatility here. And this is actually an interesting point. Let's talk about that. Is that really what I'm seeing here, and is that when you don't see, when you get these low volatility type situations, if you think about it, we had Powell talk for 2 days, and yeah, we traded down. We traded to 40.80 the other day, so we traded back down to mid 39 handle again. and I've talked about this before, is that all of a sudden we're going to have everything in our rear view mirror, meaning that Powell's done talking. Tomorrow we're going to get continuing claims, not going to be a big deal. Everything's going to be set up for Friday. And I did see Powell say something I thought was really interesting. He said, well, we have to wait for the metrics. He goes, I haven't seen the JOLTS report today while he was talking. They knew what the JOLTS report was last week or whenever it was completed. They knew all these numbers. He knows what the unemployment number is. I mean, seriously. I mean, they know all these numbers in advance. He knows everything he's saying is, well, but he wants us little people, to think, well, they have to wait for the numbers just like us. No, they don't. Yeah, 39.77, Snook. Yeah, we're just kind of in this pattern here. This is what I was talking about. It looks like the 5-minute wants to turn up. I don't want to leave you if you were. I mean, I just got out of that trade. I think I got out at 76.25. So there's just nothing here. It may go back up, may not. We're just not seeing anything. This is the 5-minute chart that I've got up here right now. Let me go full screen. And yeah, so we just got the update. We need to break back above. If you can see my cursor on this PPM one, we would need to get above that first derivative to trigger a move. We're here. Where's the last trade here? 76. You know what? I just realized the reason why I couldn't figure out why the prices weren't matching. That's because I've got the cash, not the futures up here. Now I'm looking at why aren't they matching up? I forgot I was. Okay, so on the 1 minute was right. The 5-minute had the SPX on here. So this is, we're still getting right up into resistance. Here we are back at 78.50, 79. So they're trying to print them off. I just lost patience from that standpoint. Here we go. We're actually getting a little bit here. 80. This is the little blip. We were able to get through. It's actually barely projecting that we're going to go through, which means we should trade above the 10. The 21 is still positive, so we got a shot at a little bit of a rally here. That's what I was saying earlier. Just was impatient, didn't want to keep talking about this. Watching paint dry trade, just wanted to break out of that. Yeah, hey, Gary Hernandez. Yeah, make sure you send the email to info@Kendall Report, okay? And just speak up. Like I said, we're going to start doing some pretty interesting things on all of the products that we have out there. So yeah, so here we are up at 80.25. Let's go over to the one. I haven't looked at that for a few minutes. There we go. Like the one did finally get some nice traction here. It's still projecting that the, I'm going to take off for right now. I'm going to take the webs off, clean up the chart a little bit. We got right into those fib targets. Remember those fib targets a few minutes ago we were talking about getting up here at 78, 80, 81, 90. We actually printed on the high here 80, 80, 75. So we came just, yeah, actually it was right, almost right to the money. One tick off. So we're still getting the algos trying to get set up a potential pattern here. What we should see, and this is, when I've got the market grid on here, which is the orange lines with the dots. So over here on the left, we can go and look and see exactly what right now we're trading fib target 3 right now, and we're also trading right on R2 is 81.21, R3 is 81.71, our RXT is 82.17. This is on a 1 minute. So when we're really trading, a lot of times, like in a live room, I'm talking about scalping. Some of the techniques that we use in there is just trying to do this. Like I said, this thing, I just didn't want to keep talking about the trade, to be honest with you. So I just bolted out of that, but this thing was looking pretty good. We go to the 5 minute. We're right up at that 21 I was talking about earlier. Looks like it could stall right here again. And here we are at 80.50. The 40 right now is the 40 is 80.42. We're trying to print above it here. We're actually running up into the close. What we got here? 83.75. So the target on this, let's talk about this and see how this unfolds here. We've got 35 minutes to go. The target looks like right here. This is, oops, sorry about that. It's pretty big and ugly. So what we're seeing here is, this is something I'm writing up in my PPM article, Wavetech article that I've been working on that has gotten into some crazy size of a file. But this is what I talk about, is this 1, 2, 3 pattern, and that's what the algo's picking up on. And if I clear all this out real quick, I have to take this off to show you. But if I come in here and I turn on the show pivots, I want you to see that. So this is exactly what I was just showing you. Wow, it's moving strong here. And we're looking at 87 now. So we're coming right up towards the 200 and the fib target 1 on that 5 minutes. So that was a really nice target in this pattern. But this is what it picked up. Let me show you what it picked up here. And when you see this stuff working real time, it's pretty amazing. So this is what I was about to show you. This low, that's what these arrows are showing us, the pivot. And then what it does is it figures out where this target's going to go. And one of the things I talk about a lot in trading is you have to be able to anticipate. And I was actually perfect buying down there. I just got bored. I didn't want you folks to get bored. I was worried more about you folks in that trade. But this is exactly what was set up. Is this pattern right here was the target of this market. So you can see now we're trading 87.75, and that fib target is 91.50. So, and the 200, do I have it up there? I can't get to it. So the 200 is right there as well. You're looking at $200 is 89.32. So this is a 200 paired moving average on a 5-minute chart. And here, this will be interesting to watch, folks. So you can see this working. Is right here. You see the algo is turning down on the next pattern.
Order filled.
Yeah, see, where are we on the update? 31 seconds. So algo is suggesting we should come back into the pattern a little bit, flatten out. Let's look at the one. One is also rolling over. The one is getting a potential. If I turn the webs back on for a second here.
Order filled.
Let's see if we can get yeah, so we still have a bit of a bullish flag setting here right now. Just trying to things should start to peak out. We'll go back to the 5. We just got the update. Yeah, probably one more bar. One of the guys that was in the live room for a while always talked about the 10-minute rigged. Last 10 minutes are rigged, and we'll get a chance to watch that because the volatility, and there's two things to watch out for, is not just the volatility, but the tick volume. And so we're trying to see if we can take out the previous 5 high. It looks like this should be the top bar of this pattern. So somebody asked Chi-Town, yes, the 5-minute 200 is the resistance point. We also have that fib target. So we'd call it between that 89 and that 91 level should be pretty good resistance. The algos suggest we're going to roll just a little bit here. Also, PPM 2 is pointing down. 3 is not far behind it. So we should see it try to pull back a little bit. Probably the resistance point will be that 200.
Order filled. Order filled.
Yeah, so we're still getting a print up. Here we are just about to that 200. All right, so Eric is saying, look at the order book. Let's go here. Let me adjust this a little bit. Yeah, so we can take a look at this. We're almost right there at that 200 right now. 200 is 89.32, printing last. 90 is printed 90 here. They're getting some pretty good traction. Midpoint of the day is 91 at 91.50. So we're just printed up into that target range there. We'll see if this is the final high here of this pattern.
Order filled.
Yeah, maybe we're going back.
Filled.
Maybe we're going back over 4,000 here on the close. Definitely getting some traction here. Short covering, Powell stopped talking. Nobody wants to be short under 3,900, I think. It's just been not a good idea.
Order filled. Order filled.
Yeah, nice vertical move. We just got the update. We still staying strong. There's also a new fib target in here, and the new fibs are 89, 95, 98. So it's starting to try to flatten out just a little bit.
Order filled. Order filled. Order filled. Order filled.
Yeah, they're really rolling this thing. Here's 96 and a quarter. We're coming about into that 10-minute manipulated range.
Order filled. Order filled.
Yeah, absolute vertical move on the 5 here, right off of this pivot. That's where these targets came in here that I was talking about a little bit ago. So correctly found that 1, 2, 3 pattern, which is, if you understand that pattern, you can make just a lot of money on.
Order filled. Order filled. Order filled. Order filled.
97 prints. We're about 3 minutes from probably some volatility coming in here.
Order filled.
Starting to roll over a little bit here. We are a minute and a half away from crazy time.
Order filled. Order filled.
There we go. We're trying to set up a little mini veil top here. All right, here we go, folks. There it is. Watch the volume. Everything picks up.
Order filled. Order filled. Order filled.
I got pretty aggressive there.
Order filled. Order filled.
I've got to stop on the final position here. Just trying to cover that up. Yeah, there was a good
Order
scalp.
filled.
There we go. All right, so that was actually a pretty good trade. Yeah, I started selling just above here. The algos are looking like we're going to turn down. I think that was probably the surge into the close. Yeah, good, Jay Reardon. Awesome. I'm sorry, Carly. I'm so sorry. Eric, you're always in and out too quick, man. Yeah, looks like we're setting up here on the 1 minute. Let's go over there. Looks like a potential dragon head formation. Let me bring that down. Looks like there might be some more upside. They might try to print this up in that last 8 minutes over 4,000 again. I said this is fascinating to watch this thing trade every day because they've been doing this every day. You buy down. I'm telling you, 39.50, 40.50. I mean, these numbers have been golden. Oh, that's good. There was some good overnight trades. I actually had a pretty good day as well. There's nothing worse than your lagging on volume. Carly, do me a favor and see if you can figure out how many jumps you have to make from where you are to get to the location. You can do a trace route and see if you can figure that out. Sink or swim. Yeah. Yeah, so we rolled under that 10 here on the 1. See how we've rolled over a little bit. Let me get this junk out of the way. This is still somewhat of a bullish pattern. We do have the dragon head. You can see it better here on TradeStation and than what you can see on the other side here. But yeah, so the 1 is still the algo. That was really a good call on that algo there, folks. It was telling us that bar where that pivot ended up was the high bar of this pattern. And I had gotten short early, just started hammering on that when we got up there. So now we just got another, this is interesting. We just got a pivot come in here. Yeah, it looks like still going to stay flat, maybe roll down here a little bit. So we're not going to, probably not going to see a 4,000 print. That would have been interesting, but maybe there's a big surge coming out of nowhere. FF, I can tell you my first modem was 400. 400, 1200, 24, and you know the rest of the route. I remember 14.4 was screaming. Yeah, I think it's going to stay stable here, folks. We got what do we got? Just about 5 minutes. We'll come out once the market's closed, and we'll spend a few minutes chatting. I'll look at some of this stuff. So. Yeah, the patterns that are setting up are interesting. Like I said, we're going to have, we'll talk about it in a minute. Let's watch last couple of minutes of trading here. We got 3.5 to go. Yeah, 15 minutes exactly. But that was, man, I remember 14.4. That was like amazing. Yeah, so we flattened out quite a bit here. Just looking at the 1, let's take a look at the 5. Kind of setting up a little bit of a pattern here. Let's see if I can put the webs back on for a minute. Five minutes started to roll over. We did get an update to that fib target, so 89.95.98, and we printed 97.75. So it was a pretty accurate prediction there on the Wavetech algo. So hey, listen, if you don't have them, you can get them easy. It's kendallreport.com/indicators. Check it out. Yeah, you know, that's one thing I never had. I never was an AOL customer. Yeah, I mean, listen, folks, these algos do a really good job. And that's why I wanted to spend some time showing everybody exactly what they're doing, how things are being predicted. And, you know, it caught that low really well. And also that top, when you see the algos are doing a sharp turnaround, it turned out that the prediction was a sharp turnaround on the 5. The reality was a flat. You can see it here. But it was enough there to make a little scalp off of. That's pretty funny, NFL. That's really funny. Yeah, if you ever see Glenn Ross, let's see where we at here. We'll let the market close before we chat. Yeah, just kind of bidding right around here, just stable. The algo on the 5, the PPM 3 is looking like it wants that all these averages going to turn up. Well, we're about to get an update here on the 1 hour. And it looks like it wants to turn up again as well. So all of a sudden, what's that number? Yeah, 89.25 is the 10-hour. All of a sudden, we're back above the 10-hour. We come into the close here. So this is the final. There's the bell. I know the other thing is, I forget, I'm not in the live room because there's like a 20-second lag here as well. I forgot about that. This is no fun in here doing real-time trading. The live room has no lag. Anyway, folks, yeah, so okay, so yeah, kind of a fun session here. Tried to do some trading. I forgot about the time lag. So you guys are like 20 seconds behind on everything. So that's a pain in the butt. But just so you can get a feel for how these things are working. It's interesting because once again, where we at 397.6 on the 10. The futures got a little bit of a rally. All of a sudden, we're up in the 94 handle on the S&P futures. You know, there's no downside in this market. I know it's just minimal, and I think that has a lot to do with the relative, just how the positions are going in on our intermediate basis models. I just don't see that as a super negative on that the market's going to be able to decline. That's why I maintain everything. So let's just see what you folks yeah, so anyway, I had a really good day today. I hope you folks did. I've been up since 5 a.m. this morning. It's been a long day already. And I still have to come and see you folks on YouTube tonight. So take a little bit of break this afternoon, and we'll go from there. Just looking at yeah, it's pretty funny flashing back to those old days. There was something I was going to talk about, and I forgot what it was after pausing. But yeah, there's just I've been with I've been around a long time, and I was an early adapter. I had a PC on my desk when I was in 1980. I didn't have a PC. I had an Apple II, but I had a VisiCalc, and I was crunching numbers for a trading model. My very first trading model was on a VisiCalc on an Apple II 1980. And it's anyway, I go back with technology from the beginning. I think I converted over in 82 to an IBM XT with a dual hard drive and maybe 48K memory. And I think it had 31. I think the old storage was like 31 megabytes of storage. So yeah. Just reading some of your comments here, real quick. That's pretty funny, Greg. They were expensive, man. We got an Apple II with the color monitor. That was an upgrade, and then we also had a printer. And I think we spent $6,000 on those three things. That was a ton of money then. Yeah, we can take a quick look at oil here. Let's go over and take a look at that. We can do a couple things here. Let's yeah, oil's kind of looking like it's trying to roll over here just a bit, but I think I'm still stuck. I'll cover this in detail tonight, but still stuck in this sideways range. I mean, it's pretty visible. I'm going to draw in two things here, and this is really what this market's been all about. Oops. Sorry about that. Big ugly box. I'm just going to box out this whole area here. I want to talk about what's going on with the. You can just see these zigzag patterns over. So just taking some basic things, and this is what I'm trying to accomplish on this article that I'm writing on Wavetech and some Elliot ideas. Elliot wave can be so complex that no three of us can come up with the same wave count, right? So what I did back in the 80s is we started something. Wavetech happens to be a way of filtering out about 60% of all the intricacies and start to get down to just figure out what you need for Elliot. So this is a very quick Elliot test. When you see, this is a daily chart. So this is significant in that there's a lot of daily bars here. There must be, I'm going to say 30, 40 bars at least. But this pattern, when you see overlapping patterns like this, sideways like this whole area in this box is basically a corrective phase. What's nice, if you get these tools, the Wavetech tools, what you're going to see, and this is important, is look at how accurate a lot of these Fibonacci targets were to where the high ended up topping out here, and most of them came in for the most part probably 6-8 bars before we got to that price target. But that whole box was defined. Even on the downside, the Fibonacci targets on the downside were really setting up this range. And what we were seeing on PPMs right here was just stable sideways, no big acceleration up or down. We are right now PPM 1, and I'm going to take all this junk off here in a minute, but PPM 1 is, I think, I'm not sure. I'm going to take it off first because sometimes, depending on where the cursor is, it does some weird things. Okay, yeah, so PPM 1 is at plus 0.3290. ppm2 is at 1.4, so let's blow this up a little bit. So we traded just a little bit under these averages. My thoughts are we probably, matter of fact, we got an STX buy signal. We should come right back into this range when we get the update for when the reopening happens later this afternoon. We'll have all the market grid targets and everything. And I think we probably end up coming back into the 78, 79 level. It doesn't look like we're going to follow through. We could do something here. Let me draw it in. But I'll go through this in detail tonight. The concept is here that we probably get some kind of pattern that is doing this, whether it gets a little slight downward bias that the grid starts to turn down here and we get into a channel coming down. In the end, we're still within this range. I bet if we could figure out what the mid-range is, what this middle range is, and we're just fluctuating around that midpoint of this pattern. So the basic thing, let me just take a lot of this stuff off here. The thing that is important to look at is just how these waves overlap. There's no impulse waves, so everything's part of a correction. And I'm going to zoom out here real quick just so I can bring this out to the next level. When you see all of this stuff, okay, this is a daily graph. So we go down, all of the waves all the way down have been overlapping. And what that means is this entire sequence going from the highs over here at 122 is a corrective wave. And even if we get back in and we move up over 100 or something again, then that's probably part of a bigger corrective wave. And the way you're going to see that is to come in right here. This is the perfect chart. You go over to a monthly chart and you're going to see we got this move down, and now let me draw it in just so we can go through here. Yeah, so corrective is overlapping, and so but if you look at, I'm just going to draw in all this stuff. Everything in this pattern, just chunky overlapping waves. Finally, we get a little bit of an impulse wave, but this is monthly, right? So we go all the way back to, this is 2009. So this is the old highs, but then we come down into here and we get this pattern still overlapping. We get one more, and then we get down to those negative numbers. Boy, what an opportunity it was to buy oil there. And then now we get this big move up. And so this wave off the top is corrective. So one could argue that the next move up will be a retracement, maybe a right shoulder, and then we do this. The other alternative is that this is the beginning of the next run. So this is let me back out a bunch of this stuff. So the argument would be like a 1, 2, this is wave 3, this would be wave 4, and then we get a 5 wave up. And the article that let me get rid of all this. The article that I'm trying to finish right now, I show you a technique that I learned a long time ago, is if you know 2 components of a sequence, otherwise you know the bottom, you got wave 1, and then like the right shoulder retracement. If you know those 2 values, I show you how you can calculate a potential 5-wave pattern. And I would be willing to bet if we did that on the crude, we'd come up to where the top of the 5th wave would be, and it would probably be very interesting to go through that Um, um, yeah, so the STX buy signal at the moment is not part of the indicator suite. We are working on a couple things on the future. There's going to be there's a whole nother sequence of things that happen that will happen as far as those go. But the STX, it's pretty easy to see them on the screen. But that's one of the indicators what we're working on. Okay, so I'll be careful. I was told by one of my programmers and IT guys, never sell something you don't have. So I'll just tell you that we're working on a thing called Wavetech signals, which will be some signals like STX and some other items that will hopefully be able to solidify. The problem is we can't do our models on TradingView because, as a matter of fact, we can't even do them in TradeStation. The only reason why we can do them in TradeStation because we can do an outside call to bring in some values to be able to do the routines necessary to use the models. So we can't do it on. In theory, we could possibly do it on TradingView, but the distribution of the other files would just be nightmarish to try to get it. And then I guarantee you there'd be all kinds of support issues, and then it blows up, and then half of you people would hate me because you couldn't get your stuff to work. So we've stayed with the stuff that is easy to work and doesn't break and has a minimum amount of opportunity for a support call to occur. Those get to be just impossible to handle, and we don't have the staffing or the ability, and even bots helping out are just terrible. We've all been there. So but yeah, when I get this stuff out, folks, you're going to be happy with me. The problem is I actually was working on a project yesterday. There's 18,738 words in this thing. So I'm trying to scale back some stuff. It's been, I've been in total mad scientist mode. So anyway, all right, folks, we'll call it quit here. I will see you tonight, usual time, 9:00 Eastern. And what is it? It's Wednesday, so we got one more night. It's crazy how fast time goes, huh? So anyway, folks, thanks again for watching. Really appreciate it. And we'll see you guys. Yeah, we'll see you guys tonight. And yeah, like I said, I try to be somewhat discreet, but get these indicators, and they're amazing. And especially we're going to start this market mastermind course. You're going to want to be part of this. Yeah, thanks, Fennell. All you guys. There's a lot of folks here I see all the time. You guys are awesome. I have to tell you, those both mainly on Twitter and some on YouTube. When I was down sick, man, there was a lot of love. I appreciate it. So anyway, like I said, we're going to figure out how to do some live events. I love meeting you guys. I'm trying to remember, last 3 weeks, I've had the opportunity to meet some of you face to face, and some were completely across the planet, just happened to be in town, and it was like really cool to get to spend some time. Yeah, I can't wait. Yeah, the new article. Can I tell you, man? It's not a cluster completely, but it is gotten very, very complex. I mentioned the other night I've kind of painted myself in the corner. I'm just trying to get out of the corner now, because now it looks like there's maybe part 3, part 4, maybe part 5. But it's okay. It actually ends up that the probably a book on Wavetech, and I started there's components of this of the past, and we call it the magic formula. I was telling somebody this morning that I spent my entire career has been driven by a study of moving averages, the PPMs, all the stuff that I talk about. I've been doing the same thing since 1984, and things have evolved a bit and understanding. And I made a comment to somebody on Twitter that I've got a lot of data points to evaluate whether my opinions are valid or not. And I have always been willing. I've been head of financial research, a major firm. I've been all kinds of stuff, and I've always been the guy willing to put myself out. You guys know that's the case, and I will continue to do so. So thanks again for watching. We'll see you guys tonight. Hey, Jay Reardon. I don't know who the artist is. We use a service called Storyblocks, and I got it from here, so I paid for the rights to use it. If I think about it, I'll see if I can find the artist. I know you're on at night as well. Take care.